Hi, it's James here and welcome to the FX Axe channel, your #1 trading resource. As always, we will be providing transparent and informative content without the BS. Today, we are going to cover what price structure is and how to recognize trending versus ranging markets. Also, we are going to be talking about what we believe to be the most useful beginner-friendly chart patterns that you all must know when trading. Before we begin, a disclaimer for you. Forex trading does carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Our videos are for educational purposes only and delivered by a team with verified results. So please like, comment, and subscribe if you enjoy the content. We'll break this video down into 4 different areas. Each structure and pattern we will discuss, we will provide examples for. So don't worry about missing out on anything. There are key features which are easily recognized when trending upwards or downwards. We know that markets don't move vertically up forever or vertically down. Prices have pullbacks along the way. However, continue in that trend that they are going in as long as price has enough momentum. Trends don't last forever, and we know that prices are doing either one of 2 things, ranging or trending. This Australian dollar versus the US dollar daily chart shows very well the key features of a trend. You can see very strong movement towards the upside, with price action gaining momentum and ultimately moving quicker in the direction that it is trending. Compare this with the size of the pullbacks, which have smaller candles and often are indecisive. As we can see, green followed by red, and the price ends up moving sideways until continuing to the upside. This is an example of a longer-term trend, lasting from November all the way until the end of 2020. But trends can occur in all timeframes, as we have covered before. The higher the timeframe, the more long-term the trend is, and the stronger the trend. What are the key characteristics of a trend then? Here we have the Kiwi yen on the 1-hour timeframe, and as we can see, this is also trending to the upside. Again, we have pullbacks along the way. However, the price action is still in a structure, moving upwards. This structure consists of higher highs and higher lows. It can also work in the opposite direction, as price moves into a bearish structure. Price action begins to form lower lows and lower highs. This is a great example of how price structure can change from bullish to bearish, once creating higher highs and higher lows, to creating lower highs and lower lows. Going back to the higher timeframe analysis, there are going to be more frequent changes in price action and structure on the 1-hourly chart than there are on the 4-hourly or the daily for that matter. Here's our FX Axe tip for this video. Always check the higher timeframe to find out if you're betting against the long-term trend of the market price. Remember, price action is stronger when moving in the direction that it is trending towards. So how can we determine when the market is pulling back just to move up or down back into the direction of the current trend? This brings us onto a very important part of trading, and a very useful skill to have if you manage a strategy that gives you the correct entry to these, more often than not. We are talking here about reversals. Now, the strongest part of a move is at the beginning of a trend. And when getting in at the start of a reversal, you can hope to gain more pips at the start of a move than at the end of one. So, what are common reversal patterns to look for? We've covered prices moving from higher highs and higher lows to lower highs and lower lows. However, these breaks in chart structure can be characterized by some notorious patterns, which gives some signs that the market may be beginning to reverse. Now, here we have the Kiwi dollar on the hourly chart. And the first pattern we want to show you is the ABCD bearish pattern in a bullish trend. We can see price break a soft level of resistance and create a lower low at point B, also breaking down the bullish structure. Then price retraces up to point C, creating a lower high and confirming a temporary move to the downside, breaking down further. Another reversal pattern which all traders must know is the head and shoulders reversal pattern. Now, the head and shoulders pattern is another great example of market structure deviations, which can be seen on any time frame. Price is moving in an uptrend, creating what is known as a neckline, with price breaking this to create a higher high. This is the left shoulder and the head now completed. The price falls down and creates a lower low. Now once price retraces up to test the neckline and left shoulder, it fails to break through this level. This causes a lower high to be made on the chart, breaking out of the bullish structure and ultimately breaking down into a short-term downtrend. Some other reversal patterns that can come in at the end of a move are called wedge patterns. These can be called rising wedge patterns when indicating a move to the downside at the tail end of a bullish trend, or you can have falling wedge pattern formations which come at the end of a trend to the downside, which indicate a reversal to move to the upside. These two patterns are common in spotting when a reversal might take place. As you can see, the strength of the direction the market is trending in decreases. As the strength of the trend falls, you can see the price gets squeezed, showing more strength from the sellers in the first photo and more strength in the buyers beginning to come in the second photo. The market begins to move away from the original trend, beginning to create a reversal structure. Now, one good way of spotting these early moves is looking at the strength of the trend. Are there early signs that the price action could encounter some obstacles? You can also have rising and falling wedges when confirming a continuation of a trend. Other very common patterns on a chart involve double tops and bottoms, or triple tops and bottoms. Now, we have a video on support and resistance, which can be found here. However, as you can see, there are levels which price fails to break through on numerous occasions. These levels are found to be significant on any time frame and can be traded on any time frame. Failure to break key resistance or support levels can be signs of early reversal patterns and are commonly found by retail investors. Other patterns that are known as continuation patterns can be seen to show up in the particular market conditions that they are currently in. A bull flag in a bullish market and bear flag in a bearish market. These bull and bear flag formations are useful in showing us when a reversal is not likely to happen and prices are likely to continue moving in the trend that they have been in, either bullish or bearish. Remember, some patterns like wedges, as we showed earlier, can be a sign of either a continuation or a reversal pattern. If price action looks messy on a lower time frame that you are trading, remember to check a higher time frame to observe the longer term market trend when you can. Remember our Kiwi yen example earlier? Well, this was a short-term reversal structure on the hourly chart. However, it would be important to check that you are not placing yourself against the long-term trend of the market. You're giving yourself a greater opportunity of making a successful trade if you are trading in the direction of the trend. As we've shown many times in this video, momentum of price action is very important in showing you the direction that the market is heading. Early signs of a reversal can be seen before prices make their initial moves against the trend. This is a great example on the daily chart for Euro Swiss. We can see that as price gets towards the end of the trend, bullish momentum actually begins to enter in at the beginning of the wedge, and gradually the selling pressure cannot make any new lows, before ultimately moving upwards and away from the previous trend. Despite this chart not playing out fully as of yet to confirm a longer-term reversal, there have been plenty of early signs of pound weakness against the US dollar, which we've covered many times on this channel. That is all we have time for today, everyone. We hope you enjoyed it, and we hope we provided you with some very useful content that you found easy to understand. Of course, there are other patterns used in chart analysis. However, these are the ones that we believe are the most vital to any beginner's trading experience and build the foundations for your trading strategy. Please check out our newsletter and other videos on our channel, and also subscribe and share this around if you thought the content was useful. Thank you for watching.